Normally, when stocks get pulverized, I smell opportunity.
Buy, buy, buy!
But sometimes the smell is a disgusting stench at almost any price.
Sell, sell, sell!
And that's how I feel about the oil and gas stocks here. After today's massive 24% collapse in the price of crude, a gift from the Saudis and the Russians, who are now in a price war. Now, I've been criticizing this group nonstop for months because I wanted to immunize your portfolio against a wave of selling, typically made by younger portfolio managers who care about the environment more than they care about chasing yield. We saw the same thing happen to big tobacco stocks in the 90s. I mean, buyers stopped caring about their high yields because most portfolio managers no longer wanted to show that they own them. Cigarettes were too controversial, and that's why I've been calling oil and gas stocks the new tobacco. Now, let me be clear. From an investing angle, the problem is not climate change. It's the controversy itself. My critics in the oil industry don't seem to get my reasoning. They come back and they tell me, Jim, I mean, oil will be around for many, many years, so it can't be tobacco. That is not responsive. Tobacco's still around, too. The issue is that when lots of money managers refuse to own your stocks, those stocks go lower. And that's why I've been arguing that the oil and gas cohort was not investable. Now, though, we've got a much more serious draconian reason to sell them: the sudden collapse in crude as Saudi Arabia and Russia engaged in this vicious price war. The Russians were pumping too much oil in an attempt to drive American producers out of business, typically the shale producers. So now the Saudis are pumping even more to drive the undisciplined Russians out of business. And that's how the price of crude sinks to $31 a barrel. Again, a huge 24% decline in one day. Breathtaking. Now, can these two competitors crush the great American oil industry? I know that many of our producers have hedged well, and some of them have terrific assets that can turn a profit even at $31 a barrel, and certainly if that becomes the new normal. They'd be in trouble, though, if we took out the 2016 low of $26 a barrel. But right now, the good ones will survive, even though their stocks, many of them, are cut in half today. They may even thrive because other ones may be desperately needing to raise capital, and they'll sell their good assets to the stronger ones. Unfortunately, there are a lot of bad ones out there, and I think there could be many failures. And the first among them is once gigantic company, Occidental Petroleum, which paid a massive amount of money, $55 billion for Anadarko, which is only a decent producer, frankly. After today's drubbing, Occidental is now worth just $11 billion because it will have a very hard time paying its debt and drilling or even taking oil out of the ground. When it comes to the oil industry, you know I trust no one more than Rusty Brazil of RBN Energy. His work suggests that Occidental has a $30 per barrel finding and development cost and a $34 per barrel lifting cost, making it the third worst of the 37 producers in the United States that he follows. So Oxy's monster 25% dividend yield simply isn't safe. There's a reason the stock lost more than half of its value today. Now, I begged this company's CEO not to buy Anadarko. Begged! But she did it anyway. Now I'm begging you not to buy Occidental. Of course, it's entirely possible that the Saudis and the Russians realize they're both cutting off their noses despite their face. They won't be able to destroy their U.S. competitors, and even if they could, it's really stupid to flood the world with oil right as we're going into a global recession. Less demand plus more supply equals much lower prices. Their economies are heavily dependent on oil. It's very self-destructive. The most likely repercussion from this petroleum price war, the collapse of the increasingly unstable regime in Iran, which is uniquely vulnerable with arguably the worst COVID-19 outbreak on Earth. Iran is a Russian ally. How could they be a Russian ally and Russia's doing it to them? Plus, the Russians are into Venezuela for billions of dollars. This is another unstable government that could collapse if oil stays at 31. Everybody doing this to destroy the U.S. producers, even though it's not in their self-interest. Now, I know there's a carryover war to the U.S. banking system. I'm more sanguine about their exposure here, even as the banks are in bad place because of the yield curve. I mean, I don't know. J.P. Morgan down $14. That's a buy to me. Remember, oil went to $26 at the beginning of 2016, and the banks survived. Since then, most of them tried to diversify away from energy. So what do you do if you own the oil stocks? If there's any kind of rumor that the Saudis and the Russians have a new deal to save OPEC and reinstate the old order, I think you use that as a chance to sell. If you need the money, by all means, sell tomorrow if it's an oil company with a terrible balance sheet like Occidental. It's a challenging time to own stocks, but it won't always be. The oils, though, as I've said again and again, their time, it's come and it's gone. Let's take some questions. Let's go to Bud in Washington. Bud.
Jim, I bought Ford at $8.55, sold it at $8.95. I've been seeing a lot of negative stuff about Ford, but I'm still interested now, especially at 6 lots.
Yeah, you know what? I'm having trouble with Ford. I think that Ford is balance sheet's not good. Lots of end markets really bad. I'm gonna have to say no to you on that one. I wish, Bud, that I could be more, congenial and convivial, but no to Ford Motor. All right, it's a painful time to own stocks, but it won't always be. I wish I could say the same for oil and gas, though. Their time, it's coming. Go on. Mad Money is back after the break.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.